So in this conversation, of course, we always just touch on Naspers because we actually own them in our portfolio. It's the multinational media giant. Of course, it's got its Multichoice business, which has got the rights to broadcast a lot of the content that we've been talking about earlier in the show. So they buy that, and because they're in the market down in the southern tip of Africa, nobody gives two hoots about that as long as someone's paying. So what you can watch on Multichoice is a much better total bouquet than is available both with regard to sport and dramas than almost anything you can get in the world, where you have to pay for it piece by piece. Anyway, I'm just talking up our own story here. And then, of course, it's got the stake in Tencent out in China and all those other internet and e-commerce businesses. Market capitalization we can measure in rands because it's listed here. That's 1.13 trillion rands. You don't get to use the T word very often. Not often. Trillion. That's like, you know, I don't know, a hell of a lot of noughts. Price to earnings ratio of 111.54, but I don't think we care too much about that. Dividends, we're not really in it for the dividends, 0.22. Share chart will reveal that it kind of got close to 3,000 rands a share, but it sort of sagged back a little bit. But I mean, it's still, Chris, a stock you've just got to own in our local market.
If we exclude Tencent for the moment, because we're talking more about the media side of things in this context, as you rightly say, Paul, I mean, there have been people who've tried and they've failed absolutely dismally to take these guys on in terms of content, because you're right. Look, it's expensive. You compare this with Sky, which is a very close competitor, and it's much, much more expensive than Sky, even when you do the
So when you take the 1,000 rand or whatever the premium bouquet costs here and you convert it to any other country currency, it's pretty pricey.
And so that's why they make a huge profit on this thing, even though they're having to pay up to get the content. But the content is just so far.
They always complain that the content costs have been higher because of the weakness of the rand.
Yeah, no, that's true. But tremendous operation. And when you add Tencent into the whole equation, I mean, it takes into a different league altogether. But there's been a bit of controversy in recent days and weeks. There's this Swiss chappie hedge fund who's suggesting that actually having this stuff in addition to Tencent is actually destroying value.
Which I thought was a bit unfair, because actually these assets will be superstars, some of them, even if aren't all of them. And at some level, you've got to just say, well, you know, the investment market must wake up and value the thing properly.
I mean, it's sitting there at a kind of negative value, and I think that's sort of what he's getting at.
The other thing I think he misses is that it's not just anybody that can wander into China and take a 35% stake in their biggest company. This stake is small, it's quiet, and it's chunky, but it's not irritating to the Chinese. They can't take that 35% stake and, you know, sell it to a big US corporation. The Chinese would never stand for it. But the Chinese government doesn't care. It's like South Africans, oh, well, they're all right. You know, whatever. They can have a stake of 35% in Tencent.
And, you know, go back to when they actually bought this thing, 15 years ago, whatever, inspired in the extreme. Again, it speaks volumes about the vision of Koos Becker.
Yes, and so if they find similar assets, then they'll also be valuable like that in the fullness of time. Anyway, no-brainer. Buy Naspers in your portfolio. Got to be hot. It's worth so much more than it's listed at right